Yeah, so hello everyone. I'm Muska Ulhak. I'm the Director of Programming at Social Innovation Canada, and I'm delighted to welcome each and every one of you to this Investment Readiness webinar. We'll be starting the event shortly, but before we dive in, I would like to take a minute or a moment for a land acknowledgement. Today, we as a community are gathering in a digital realm from many individual spaces. Together, we would like to acknowledge that the land on which we operate is located on the traditional territory of the Huron-Wendat, the Haudenosaunee, the Seneca, and the Mississaugas of the Credit First Nations. So this event is quite unique in our Investment Readiness webinar series. We had a privilege to collaborate with Imagine Canada to share insights and perspectives about the investment readiness of social purpose organizations through the case studies that they have been diligently working on as part of their IRP partnership. So in addition to the insights from Imagine Canada's case studies today, you will also hear an engaging discussion from a diverse lineup of industry leaders sharing key takeaways to help advance and better understand SPO's social finance needs. We also have an audience Q&A segment at the end of the panel, so please add your question in the chat box throughout the panel, as well as throughout the session. And this webinar is part of our Investment Readiness Programming in partnership with Employment and Social Development Canada. The goal of the program is to grow and strengthen the social innovation and social finance ecosystem by providing information, opportunities, resources, as well as connections that will help SPOs become investment ready. Just some very quick additional housekeeping notes. We have live French language closed captioning available. For those of you looking to have this feature visible on your end, you can select the Show Captions on your screen and click the up caret button to select Translate to and choose your desired language from the drop-down menu. And as a reminder, this session is being recorded, and if you experience any technical difficulties, please reach out to my colleagues, Cathy and Alex, using the chat feature, and they'll be able to assist you. We also have a very short poll for you, which will launch right now. This is to help the panel discussion and as well as just sort of your understanding of this topic. So please kindly take a few seconds to complete the poll. And now it's my pleasure to welcome and introduce Leena and Cathy from Imagine Canada. Cathy Barr is Vice President of Research and Strategic Relationships at Imagine Canada. For over 20 years at Imagine, Cathy has led dozens of data, research, and knowledge mobilization projects. She has also been involved with numerous public policy and government relation initiatives and led the creation of Imagine's National Standards Program. Leena Yahia leads Imagine Canada's IRP project on social finance. She is a researcher and a lifelong learner. Her background and work experience cover a wide variety of experiences in teaching, research, consulting, leadership, and evaluation. Leena is currently finishing her doctoral work at Queen's University, focusing on how governance, compliance, standardization, and sector coordination can be optimized to improve outcomes for social purpose organizations. Thank you, Cathy and Leena, for joining us, and over to you to get us started, please. Thank you.
Thank you, Muska. Leena is going to be running the slide deck and doing most of the presentation, but I'm going to start with a bit of an introduction to Imagine Canada and to our project there. So Muska mentioned the Investment Readiness Program, and this work that Imagine Canada has done that we'll be presenting today and it's still a bit of a work in progress. It's not totally finished, but some early findings from our research project, which focused on the investment readiness of social purpose organizations. So just a word about Imagine Canada, since this is I think there's probably people in this audience that are not familiar with us. Imagine Canada is a national charitable organization. We are a registered charity. We've been around with this name since 2004, and previously we were known as the Canadian Centre for Philanthropy. So a longstanding organization, starting originally with a most focus on charities, then moving more recently in the last 10 to 15 years to focus on charities and nonprofits and even the broader social world and social purpose organizations. So we're kind of like I guess you would say the kind of the umbrella organization for certainly for traditional charities and increasingly nonprofits and other social purpose organizations. We've done 2 investment readiness projects as part of the Investment Readiness Program. The first project, which was completed in 2020, was a survey called, and the title, we gave the report the title of "Are Charities Ready for Social Finance?" And this was this report focused on the results of a survey we did of registered charities only. In late 2019, early 2020, we exited the field just before the pandemic hit, and the report came out later in 2020. And the focus on charities was not a particular. It was not it was a choice done for methodological reasons. We have as some of you may know, the charity population is very well known. We can do a probabilistic survey of charities. We can't do that type of survey with the broader social purpose organization group. So that was why we chose to focus on charities for the first survey. One of the key findings was that charities, at least, were relatively unfamiliar with the term social purpose organizations, with social finance in general. Sorry, Leena, you can go to the next slide now. So for the second project, we wanted to expand from just a focus on charities and to the broader social finance ecosystem. And so just a little bit of a short detour into definitions. The Employment and Social Development Canada, which leads the Investment Readiness Program, uses this term social purpose organizations to describe charities, nonprofits, cooperatives, hybrid social enterprise, and also including mission-focused for-profit organizations. And these organizations are, of course, very wide-ranging in terms of size and location, and also in terms of many different subsectors or sectors in the nonprofit and charitable and broader social purpose world. The numbers at the bottom of this screen are a bit rough, but in general, we believe there's about approximately 170,000 charities and nonprofits in Canada. We know for sure there's about 86,000 charities, about 25,000 social enterprises, close to 600,000 people employed in the sector, and with a contribution to GDP of over $30 billion currently. So this is quite a large sector. So for our second project, which is the one Leena is going to be talking about in just a moment, it was a qualitative research project. So the focus was on understanding at a deeper level than you can understand in a survey, the enablers and barriers to social finance adoption for social purpose organizations. And we did 22 case studies, which the case studies are all complete now. It's just the cross-case analysis that's underway. Of the case studies, there were 22 different social purpose organizations. 9 of these organizations were Investment Readiness Program participants, 13 were not. So we've got a good representation, but from both program participants and non-program participants. So I'm going to turn it over to Leena now to give you some insights into a little more insight into the project and what we found.
Yeah, thank you for that, Cathy. So as Cathy mentioned, the focus of our second project was on understanding the enablers and the barriers for social purpose organizations adopting social finance. So in many ways, we were aiming to understand the investment readiness journey of these social purpose organizations. And as a reminder, investment readiness is the state or condition of a business or organization being well prepared to attract investments and secure investments from potential investors. That involves developing and presenting a compelling case, demonstrating the potential for growth and profitability and return on investment, and it includes key elements such as a business plan, financial management, market analysis, scalability and growth potential, having the right team and expertise, having legal and regulatory compliance, demonstrating value proposition and competitive advantage, and a clear investment proposition. So investment readiness, generally speaking, is that state of being well prepared. And then there is the Investment Readiness Program, which was the second arm of the Social Innovation, Social Finance Strategy, which was the two $50 million programs that were aimed to increase the investment readiness programs. And as Cathy mentioned, we had a good sample of investment readiness recipients and also organizations from the broader ecosystem. We had rigorous research methodology. I won't bore you with the details, but our recruitment was focused on respect, trust, and reciprocity. And some of the findings of the research project so far is that there are a diversity of organizational types in our ecosystem engaged with social finance. There's a diversity of tools being utilized. There's a diversity of needs as to why social purpose organizations are choosing to engage with social finance, diversity of populations served, diversity of stages of investment readiness, some that are more ready, some that are less. And there's varying levels of awareness of social finance as well, as the poll that we just did also demonstrated. In terms of enablers of adopting social finance and investment readiness, these are some of the enablers that came out in our research. So having a clearly defined social or environmental mission was one. Being focused on growth and a growth-oriented business model, having visionary and entrepreneurial governance and leadership, having good, sound financial management and literacy, measuring and reporting impact, interest or need for scalability and sustainability, participation and engagement with collaborative networks, having legal and regulatory compliance and maturity, investment readiness capacity, that list that I spoke about in the slide, availability of social finance products in the market, because as we know, social purpose organizations can be as ready as they can, but if there aren't any social finance products out there, then the ecosystem just won't function. In terms of barriers, these are some of the barriers that we saw. Limited financial track record was a big one. Having high transaction costs, limited access to capital, complexity of impact measurement, not having legal and regulatory compliance or legal and regulatory constraints in the ecosystem, limited capacity and resources for the organization, risk perception, and we saw that risk perception exists both at the social purpose organization itself, whether in the leadership or the governance, but also in the traditional financing ecosystem, where some populations and some individuals are perceived to be more risky than others. Then there is the lack of availability of social finance products, information distribution and access, cultural barriers, risk aversion, and not having an entrepreneurial approach within the organization itself and across the sector. So many participants mentioned the need to let go of a mentality of scarcity and focus on abundance, not take no as an answer, and try and fail and try again. And then the last barrier was system fragmentation, the need for more coordination across the ecosystem. In terms of why social purpose organizations are adopting social finance, there's a variety of reasons. The first being social impact and wanting to scale social impact and increase sustainability for the organization, wanting to diversify funding sources, and then creating tailored financial solutions that meet the needs of the social purpose organizations or the populations served, wanting to collaborate and partner with others, overcoming legal and regulatory challenges, accessing capital, and then challenges with traditional financing. Another finding of our research so far is that we saw an emergence of what we call hybrid organizations, and hybrid organizations can be thought of as a spectrum. So on the left here, we see traditional nonprofits. On the right, we see traditional for-profits. And that dichotomy is in many ways no longer valid. So we see different types of organizations across this continuum, where there's a growing number of organizations that have a focus both on social and environmental missions and financial objectives as well. So, and thus the term hybrid. So social and environmental as well as the financial. So there is movement across that continuum between different types of organizations emerging, or traditional organizations adopting a hybrid mission as well. So blurring of the sector boundaries, more impact-driven entrepreneurship, that demand for blended value, both financial and societal. We saw this emergence of hybrid organizations as a response, as an adaptation strategy to financing challenges. A lot of system thinking and a lot of complexity emerging. And then we mentioned earlier in the barriers that there is a need to overcome some policy and legal barriers and be innovative. So the idea is a reflection of the broader changes in society and wanting to tap into the benefits of both being a traditional nonprofit, but also tap into the financial aspect, autonomy, sustainability, and resilience of for-profit organizations. Another finding was the social enterprise entity. So organizations that were traditionally charities or nonprofits were also creating a for-profit entity. IDE, for example, set up their own fund. Plan International set up Catalyst. Pillar Nonprofit setting up Verge Capital, Innovate Calgary as well, and the United Church of Canada. One other finding is the need to expand our understanding of the social finance ecosystem as a bigger ecosystem than we originally thought, because the ecosystem includes universities that are doing a lot of acceleration and incubation, and many social purpose organizations being born in universities. A lot of foundations are engaging in impact investment and utilizing their assets to tap into the social finance and support their mission. We saw Inspirit Foundation, for example, with 100% impact commitment. Recently, the McConnell Foundation announced that they would be allocating $30 million to support Indigenous initiatives, and then pension funds as well as other incubators, for-profit incubators and accelerators, city economic development organizations, and global development organizations and charities, all engaged in social finance. And so we need to expand our understanding of the ecosystem. Another finding was related to the role and engagement of consultants in the social finance ecosystem, and that is a role of intermediation and enablement. So consultants throughout the ecosystem were engaged with social purpose organizations and other actors to utilize their expertise and guidance, conduct market research and analysis, impact measurement and evaluation, create partnerships and network development, and increase capacity for leaders and organizations, as well as engage in policy and advocacy work. And finally, we saw a lot of creation, co-creation, and collaboration between different types of partners. So we saw creation and collaboration in terms of identifying and addressing social needs, engagement with the community, designing innovative financial products and services, where there was growing alignment between goals, environmental impacts, mission, and assets as well, building partnerships and networks between investors, social purpose organizations, intermediaries, and such, enhancing impact measurement and reporting, policy and regulatory development. So the collaboration was aiming to contribute insights, expertise, and advocacy for change in the system, capacity learning, capacity building, learning and knowledge sharing, and resource sharing as well. So folks were recognizing that they don't need to reinvent the wheel each and every time, but a focus on partnerships was very timely and helped overcome some of the wicked problems that many of the organizations in our ecosystem are aiming to solve. And that's it for our project. I now pass it to Muska to introduce our panelists. And thank you all for listening and engaging.
Thank you so much, Leena and Cathy, for that helpful presentation and also the incredible work that went into that research. Super helpful, and I think also set the context well for the discussions to follow. And now it's my pleasure to introduce the rest of the speakers. We are joined by Sabina Bharwani. Sabina leads access to finance and innovative financing initiatives at IDE. She is passionate about gender lens investing and climate financing. She brings a decade of experience with large private sector financial institutions, with a depth of knowledge and experience in different areas of finance, such as risk management, impact investments, deal flow, credit management, due diligence, and data analytics. Thank you for joining us, Sabina. We are also joined by Graham Singh. Graham is founder and CEO of the Trinity Centers Foundation, a Montreal-based charity established to transform faith properties into community hubs and new housing. TCF has released more than 75 million of property financing and has launched a pre-development fund aimed at investment from the Federal Social Finance Fund. Thanks, Graham. Last but certainly not least, we are joined by Rebecca Waterhouse. Becca is a principal at the Raven Indigenous Outcomes Fund. Becca has nurtured a diverse career in the social innovation and philanthropic sector, with the aim of ensuring equal access to all resources for all peoples. At Raven Indigenous Outcomes Fund, Becca is co-leading the deployment of the 50 million first of its kind global fund. Thank you, Sabina, Graham, and Becca for joining us, and over to you, Cathy, to lead and moderate this discussion. Thank you, Cathy.
Thank you, Muska, for that great introduction. So I get the great honor of asking you smart people questions. So just to start off, I think we need to recognize that just as the audience may not be familiar with Imagine Canada, they may not be familiar with each of your organizations. So could each of you just briefly describe what your organization does and what your role in the organization is specifically? And I'll start with Sabina.
Thank you, Cathy. Hi, everyone. So happy to be here. I would like to introduce IDE Canada. So IDE Canada is a locally registered nonprofit. We are an international nonprofit organization that works across 13 countries in Latin America, Africa, and Asia. And we work in the areas of agriculture, WASH, and access to finance. In terms of interventions, we work across nutrition, gender, climate smart agriculture, climate change adaptation, and technical support for entrepreneurs. So those are the areas that we work in. And in terms of social finance, we have our own innovation fund where we support early stage entrepreneurs to get their ideas from idea ready to market ready. The second intervention that we have is we manage revolving funds across 3 countries. These are lending funds at no interest, 0% interest rates. And then thirdly, we also have introduced social impact bonds of $10 million in Cambodia in partnership with Tone Family Foundation and USAID. Thank you.
Thanks, Sabina. Graham, I'll call on you next.
Thanks, Cathy. Isn't that so exciting? I mean, just stop and celebrate. It's amazing to hear that from Sabina. And thanks for that introduction, Muska, as well. I'd just like to clarify that we have indeed launched from the Trinity Centers Foundation, released some $75 million in projects. We have also launched our first pre-development bond. That is all aiming towards the social finance fund. So we have not received funds, in case anybody's thinking, why have they received it? We have not, but we are aiming our work certainly in that direction. I loved, I'm going to call her soon to be Dr. Leena. And I'm looking forward to when I get to call her Dr. Leena. I thank you for that presentation. And as you went through that, Leena, you know, our journey as a registered charity working in the area of faith properties. So we're looking at the 12,000 registered charities in Canada who steward a place of worship. Of those, some 4,000 of those we know are in financial distress through at least 3 years of financial deficit, and they have less than 3 years of that amount in the bank. So these are really mostly churches that are failing. We don't have a lot of failing mosques. We do have some synagogues that are reaching the end of their natural life. So our work is working with those stewards of those properties to understand the social purpose or nature of the real estate that they steward, and trying to see it redeployed into new, either what we generally call a community hub implementation, or into housing. I also love, Leena, where you were going in terms of, you know, the challenges in governance and the where are we between a non-for-profit and a for-profit. We had no idea that as a registered charity, how important it would be later on that we have run a cash flow positive consultancy for the past 5 years. And so, you know, although that's been done, and we call it, as you know, we call those surpluses in the charitable sector instead of profits, and we can reinvest those surpluses in our mission. And that's what we've done. So we operate across Canada. We have 25 very active projects right now, but one of those projects is a diocese of 150 churches. So we work with 4 dioceses, which are regional organizations. And we've just finished the Montreal Roundtable on the future of religious property, looking at Montreal's 400 churches. So we're trying to work across this. And in terms of social finance, we'll get more into this, but we really are looking at 2 main paths between either a private equity next phase, which is almost certain that we have to go down that road, as an impact fund, as well as a bond issuance. So we're really excited to be here, the investment readiness journey. And I'll say we have a case study coming out with this research project, but it's actually not our favorite IRP case study. Our favorite IRP case study is one of our projects where we helped 3 Muslim communities to join the oldest church in Edmonton. And that left space for a daycare, and actually opened up some funding with some of the local social finance funders as well. That was IRP funded. So we're just very excited about this subject. It's a privilege to be here. Great to see some familiar faces. Back to you, Cathy. Thank you.
Thanks, Graham. Rebecca.
Lovely, thank you. It's so hard to follow up with these wonderful, wonderful speakers. I could listen to you both speak all day long, and such a recognition of the moment in time that we're in right now. Being in this space, you know, that is social finance for what feels like a long time. These conversations have been ones I've been having by myself and or with a really niche group of people. And so I just am so excited by this and where we're at. So thank you to Imagine Canada and everybody for the facilitation. I'm Rebecca Waterhouse. I'm a principal, Raven Indigenous Outcomes Fund. You may have not heard that term only because it has not really been publicized. It is a first of its kind, brand new global opportunity. It's an Indigenous Outcomes Fund that is going to be $50 million raised here in what we colonially know as Canada. And it's going to go to support Indigenous communities throughout our nation. And I'll speak a little bit more to that when the opportunity arises, but I'm coming here today on behalf of the Raven Group. The Raven Group is inclusive of 2 sister entities, so Raven Indigenous Capital Partners and Raven Indigenous Impact Foundation. They work in concert to advance the well-being of Indigenous and Native American peoples across Turtle Island, and we do that with the deployment of supportive capital for Indigenous peoples, communities, and entities, and entrepreneurs and the likes of that. So what I'm up to day to day right now is again working on this fund, which was really a conception from the Raven Indigenous Impact Foundation. The foundation is really working at the community impact level, and so using social and finance as our vehicle of choice, specifically pay for success, pay for performance mechanisms, and really situated in the Indigenous context, a model community-driven outcomes contract championed on behalf of Raven for communities. And so at the enterprise level, there is the capital partners are working to deploy supportive venture cap for Indigenous enterprises and entrepreneurs. The first impact fund, about 25 million, and the second impact fund with a very successful close at 100 million. And so that is now moving more and more to across the medicine line to our family and neighbors in the States. And so we're seeing a very great trickle effect happen. So thank you. I think that's enough for now, and we will continue.
Thank you, Rebecca, and thank you all three for introducing yourselves and your organizations and your work so ably, and for clearly showing your passion, all three of you, for this topic. So I'm going to direct the first question at Graham and Rebecca, and then the second one at Sabina and Graham, and then just so you know, and then the third one to you, Rebecca, just so you kind of know what's going up. So for Graham and Rebecca, and maybe Graham, you can go first, so Rebecca can get a little time to catch your breath. What are the most important factors you think about when deciding to invest in an organization?
Thanks so much, Cathy. So it is good, and I love this poll we did at the beginning to understand folks' understanding of social finance. And the Global Steering Group for Impact Investing and the Global Impact Investing Networks both define some of the objectives for social finance. And certainly right at the front is intentionality. What is the aim of the impact? What's the story we're trying to tell? What's the problem we're trying to solve? That is got to be the most important. And as we are all emboldened through the Social Finance Fund, it gives us an opportunity, as Rebecca was saying, to lean in further and say, hold on a minute, we spent all this time on financial returns, trying to make something that is close to market rate because we haven't had any other way. In some ways, it's possible to fall, to forget our first love, which is the impact, is the whole point we're here. And to look at impact, which must not any longer be grant dependent. Grant dependency is part of a journey of colonialism. Decolonization, moving away from that, is partly financing things the way the rest of the economy is financed. It'd be almost impossible to think of starting a major business without financing. Yet we expect our social sector we have always expected our social sector to do that, along with very, very wealthy people. And looking at faith properties, that's how they got funded. People gave little bits of money, and then the extraordinarily wealthy did the infrastructure. So as we shift that and say, well, we don't live in those ages anymore. Let's fall in love again with intentionality of where we're trying to go with impact. That's number one. Number two, in terms of risk and return, that's got to be our language in investment. And when as much as we say, let's move away from grant dependency, let's also not forget, we are grant dependent. The social sector is grant dependent. We're not used to returns, right? We're used to the money going out, and then it just does cool stuff. It's not meant to come back. Investing means the money has to come back, at least some of it. And at least it has to have the intention of coming back. If it doesn't, it's not going to work. And that's a big part of our investment readiness story. So to me, that, to what extent, I met with the global, actually I'm not even going to say, but there are folks who hear social finance and they think, okay, cool, that's the next grant application. I'm just going to put the grant application in. No, this is heart surgery for our organizations. So the returns are both impact, and we can talk about many different ways to measure impact. I am most impressed by the Raven Group and their very advanced level impact measurement structure. If you missed their presentation for the table of impact investing practitioners, you can get that on the TIP website. And then the other are the risks. And we've just spent our last team retreat. See if you think this sounds fun. We spent our last team retreat of 15 of us from around Canada, 100% dedicated 2 days to a risk analysis of, our title was "What Got You Here Won't Get You There." And you think that doesn't sound very fun. But actually, we looked at all of the different risks of growing to the next stage and how we're managing them and how we can manage them even better. It may not sound as much fun, but if it could release a different level of financing, then it would be worth it. So managing risk, and that, Cathy, would be that would be, an understanding of seeing those organizations. Just say two other quick things. As we are preparing to deploy more capital into faith properties that are in transition to become a community asset, part of our de-risking, as an example, is a course that we've launched with CMHC and the Charis Foundation to train church board members on the property development process. Often they just don't know. So instead of them just training, we're saying, why don't you train, and we'll actually monitor your progress in the learning. And your learning as a board will be part of your credit scoring to see if you are credit worthy to borrow money on this. Like, isn't that exciting? And the final thing I'll say in terms of what are we looking for, we have to go back and ask, is this a not-for-profit organization or a for-profit organization that is deploying the capital? And I'll say this right here, because Leena's so set us up on this. I think we're still seeing far too many not-for-profit organizations, charitable foundations in Canada, not understanding that they are not-for-profit organizations. It's okay, they do not need to invest the same way as a pension fund. And some of their best investment managers come from those for-profit institutional worlds. We need to do that training to train them. Hey, you're now working for a charitable foundation. You can begin exploring things like program-related investments we could get into further, which of course legally exists differently in the US than it does in Canada. But if we talk about returns, we can get excited about the kinds of returns that those two organizations can make. And I know we'll have more time as this goes on to talk about when those two things come together. That's blended finance, for-profit and not-for-profit together investing. Also super exciting. Over to you, Rebecca.
I'm going to wear my hat, of course, of Raven. And so when we talk about what we look for as for prospect, investee, I want to flip it over and think about it from another perspective. And I want to say, what do communities or beneficiaries look for when working with a potential funder? And that is the lens that Raven applies when working to bolster any form of community change or community-centric initiative, right? So we want to be a funder of choice. We want to be an investor of choice, right? And so how do we apply that lens accordingly? And so I'll be transparent with you here today. I've pulled up my due diligence checklist, and I can tell you the categories of which we look at. And it will not look like anything probably any other fund, I'm sure increasingly so it will take shape as such, but it's because it's extremely personal. And so it's really, really centered on that connection. And so from a high level categories, we're looking at opportunity identification and community involvement. What does that mean? So beneficiary community need identification, community support from governance structures, engaged in representative Indigenous Solutions Lab participants, identification of lead implementation partners that are in fact Indigenous and situated with community. And so we then look at impact and prospect of scale. So alignment with our mission, vision, strategies. We're talking about our theory of change. What are the outcomes and what is the ultimate impact that we're looking at? Does this align with policy windows? Are there aligned purchasers as it relates to government and various tiers of that? And looking at the replicability of the model in order to serve more peoples and to do it in a good way. We're also looking at evidence base, data quality, which we know is a tricky issue because a lot of communities that have been marginalized have not had access to the same level of resourcing related to data infrastructure and ownership. And so that's a big component of what we appreciate we may need to invest in a development arc of a certain project itself. We're looking at the potential for a business case. What does that mean? We're looking to say, can we cost this out? What are the budget requirements? What are the cash flow projections? Does our partners have insight into what this may look like in 3 to 5 years down the line? And finally, we have partner track record, which I cannot emphasize enough, is something that really speaks to character fit, as well as their reputation. Do they have support from the number of nations or bands, that they have actually supported throughout the years? What's their risk management capacity like? Evidence of relationship capital. And then all of the other kind of, logistics and things that fall under there. But these are how we prioritize the relationships we enter into, which we will then apply with the financial lens to, right? And so that's a bit about how we enter into those negotiations.
Thanks both Graeme and Rebecca for that question. Sabina, I'm going to give you the next question, which is a little bit different. What are some of the common types of financial instruments, of social finance instruments that you are seeing being deployed or sought by social purpose organizations?
Thank you, Cathy. I would like to quickly refer back to Leena's presentation and the beautiful spectrum, of organizations that she showed in that presentation, from nonprofits to profits, and so many of them lying in between. So many SPOs are using one type of social finance tool or vehicle. Some are using multiple types. So I'll just go over some of the very common types that are used today. One of them is revolving debt funds. So these are essentially funds that go out, they're lent out, and then they come back and they are lent out again. So the liquidity management of this type of vehicle is very, very important, and the risk management as well, because if funds don't come back, they don't get lent again either. So, but this can be a very catalytic multiplier, have a multiplier effect with the same amount of funds. So, for example, one pool of funds can be lent over 7 times in a 3 to 5 year period. So you can imagine something that's $1 million can have an impact of $7 million, which is very catalytic. Another type another type of vehicle which is becoming more and more popular now are blended finance vehicles, which use a combination of grants, donor funding, debt components, equity funding, de-risking mechanisms to make sure that the investment is able to provide a reasonable return instead of a pure market-based return, but at the same time creates a very strong impact on the communities and the businesses that it works with. Another very interesting one, if I'm allowed to put this under social finance, are carbon credits. This is with climate financing is becoming more and more popular and can become a very important source of income, especially, I'll just give you an example. We have a social enterprise called Hydrologic. It's called it's got the gold standard certification, and it uses carbon credits, income generated from carbon credits for enhancing clean drinking water in Cambodia. So it creates a social impact. It's able to reach out to more households, but it's using carbon credits as one of the mechanisms. Then in Canada, there's a very interesting concept of community bonds that are being issued. And this goes out to retail investors. People like you and me can invest, $1,000 into community bonds. They can range from 1.5 million to $15 million. And the fund can then be backed. It can be a mortgage-backed community bond, like is the case with Social Center for Innovation, giving back about 4% returns. So it could be a very interesting mechanism to use for raising capital, for using capital, but then also giving back returns, even though there may be single-digit returns, but it's, as you said, Graham, much better than donor-funded or grant-funded mechanisms, which are not sustainable. Another one I would like to highlight are bundling approaches. So we also use that at IDE. We have a loan that we give out, but then we are bundling it with technical assistance and also going forward with crop insurance. So when a client gets a loan, they also get this insurance cover, which helps to de-risk the investment again. So those are some of the common approaches that are being used. I'll pass it on to Graham for his perspective.
Yeah, I think we've got 20 minutes left. So I think maybe we'll just move on with the next question because in 20 minutes, we're going to open it up to audience questions. So, and maybe if everyone could try to keep your answers a little shorter, we could try to get through a few more questions. But I know you're all very passionate. So, I know, and very knowledgeable. So I understand why it's hard to answer these questions quickly. I'm going to ask the next question of you, Rebecca. What are some of the common barriers for investees that you work with in your organization?
Yeah, great question. There's a number, and I think, Leena, you pointed at you really kind of succinctly captured a lot of what those are. I think they can be distilled into a lot of more specific barriers. One I'll speak to, and I think it's a perpetual problem we have, but it's really this idea that we're kind of faced with a critical linguistic dilemma when it comes to social finance. And by that I mean this language that we've come to know as a social finance discussion is really has an origin in the financial system, a colonial system that was intentionally created to polarize, to discriminate, dismantle, and as such created really difficult enforced really bad relationships for people with money. And so it is in fact very exclusive. And so when we get into this realm of trying to reinterpret or apply a positive spin to that of a system that has had such negative repercussions for generations, you're faced with this great deal of just fear, I would say. I would capture it as fear, as well as anger, frustration, and inability to engage with prospective kind of alternative solutions, and taking that lens. So by that necessity of having to take on a new language, learn a new language, you need a translator, and you need a friend and an ally in your corner to make sense of a system that is being built as you participate in it. So it's really interesting, from the Raven perspective. I think that's our most important role that we believe we hold is intentionally taking on a brokerage translator role, to say that the intentionality of this mechanism of alternative financing is for you, and it is for your community, right? It is, and so it's distilling these ideas down to something that's palatable, and allowing these people, these leaders, these communities and initiatives, organizations to see themselves reflected in it already. The work is being done. They have this track record. They are this type of character. They are serving these people. How do we translate that into these typical requirements, these investment requirements, so that they can play and see the benefits, immediately, right? It's so I think all to say the onus is not on them as much as people perceive it to be. There's a need for intermediation. There's a need for translation. And I'm excited by the moment in time we are in, because I think that is what's coming. So.
Great. Thanks, Rebecca. And Graham, next question for you, and it's also about barriers, but in this case, barriers to raising capital. And what have you seen to be some of the biggest barriers to that in your experience?
Thanks, Cathy. In our sector, working with faith properties, one of the biggest barriers is that there is so much capital. So in that land,
that's an odd barrier.
It's an odd barrier, but it's in the wrong buckets. It's wrongly structured. And I think we all, depending on the language we would use for that, people get this quite quickly. If I were to give you a figure, well, let's take this as a phrase. The Roman Catholic Church is the largest non-state owner of property in the world. You take other religious organizations, the religious sector very generally is a huge landowner. If our journey, though, is to try to bring property into the hands of those who've been excluded from religious narratives, and certainly we have a question we've raised already a number of comments on colonization, on Indigenous justice. It's a huge, huge issue when it comes to religious properties. So that's number one, is the capital's wrongly structured right now, and it leads to the question, why doesn't the church solve this problem on their own? And that's a question we ask very regularly, and we're pushing as hard as we can on that. Number two, as part of that, nobody wants to cash out the church, right? Let's give land value to the church. Church walks away with $5 million and goes and hides it in a closet somewhere. Nobody likes to see that. Neither do they like to see a property of a religious organization invested in with social finance dollars, and the project doesn't work, And somehow, again, the church walks away having had their property improved by social finance dollars. So that's a big one, okay? Everything around there. The other one I would say is scaling. And right now, if you were to use a rule of thumb and say there are direct impact investments made by Canadian foundations where they're expecting to write a $150,000 to $200,000 check. There's a lot of that around. There are very few of those checks available. The Social Finance Fund will increase that. But in terms of scale with some of these issues, I think that's the second issue of how do we deal with scale? We're starting out, and as Rebecca's saying, there's trust, there's all track record, but these are enterprises that are just starting out, yet they're facing these huge scale problems. And that's where I think the traditional finance sector can help us. And we can look at creating mechanisms to do that. So that's definitely been a barrier for us. And you think, this is really exciting. There's nobody who doesn't get excited about turning churches into community use. But when you get into some of those issues and you want to start deploying capital, those are the conversations that we're right in the middle of.
Great, thank you. And Sabina, bringing you back in here. From your perspective, how could social purpose organizations improve their due diligence process? Or processes, I should probably say.
Yes, so social purpose organizations obviously in many cases have a very strong impact measurement focus. And they do look at those outcomes very clearly. But I think from a due diligence perspective, it's also important to look at the return on investment, the capacity of MSMEs, for example, to repay if it's a debt and to grow if it's equity. And then also one very important factor here is to adapt the due diligence criteria based on the context in which you're functioning. So when we have a program or a fund that we are managing in Cambodia, it's very, very different from managing the same fund in Mozambique. It doesn't work the same way. So the due diligence criteria needs to be adapted to the context in which SPOs are functioning. It's also important to make sure that the organizations they're investing in have strong regulatory and legal compliance in place so that they do not end up investing in organizations that may have legal issues in the future, or also to look at what are the environmental impacts that this particular organization is having, either directly or indirectly. And last but not the least, we look at the impact on the surrounding communities. So when we invest in a micro enterprise or a large enterprise or a medium enterprise, we make sure that this enterprise is either generating more jobs or creating products and services that would help the communities around them, or advancing gender equity in some way. This is very important. If they're able to give a good financial return, but not a good social return, we would not invest in them.
Right. Thank you for that answer. You mentioned impact and measurement and impact, and I feel like that is and sometimes the elephant in the room when we're talking about social finance. How do we measure impact effectively? Many social purpose organizations are used to, having stories and, compelling narratives. Some are used to collecting quantitative data, others less so. So Rebecca, what have you seen in this area with regard to social purpose organizations measuring their impact? I mean, obviously, I'm talking particularly about the ones you're working with. What have you seen in terms of how they do that? Is it more qualitative, more quantitative? What do organizations struggle with? What are they particularly good at? Whatever part of that you feel like you would like to answer.
Yeah, sure. I think commonly what social purpose organizations are bred to be very effective at is that qualitative approach. Yeah. And so taking stories, and relaying that as anecdotes and as a narrative to kind of supplement and to reinforce the bigger picture. I've never come across a social purpose organization that can't bring you to tears in some sort of degree about the change stories they've affected, right? So I think I don't think that is a missed expertise. I think when it comes to quantitative, it is a matter of also the resources that are available and what funders like typically have historically not really like to fund impact. It's not the sexiest thing, even though it is critical to their repetitive funding. So it's a bit ironic, but we see that increasingly, at least from my perspective, a lot of really great practices are starting with a values-based system of that SPO and saying, what are we trying to accomplish here? Right? And you can start off with a basic theory of change, and you can say, and then you can offer key indicators, to say, are we in fact achieving those? So we know how to measure it accurately. And starting by taking a small, elegant approach and being able to iterate and evolve upon that. But you're going to see the combination there of the output with the outcome story, right? And so, or the impact narrative that you're going to be building over time. I think funders they very much appreciate the combined married approach, having the nice balance because it makes their jobs easier. They need to be willing to fund it. From our specific perspective at Raven, it's unique in that we ultimately are trying to change relationships between federal government and how they value Indigenous lives. So ultimately outcomes. And so we take a two-eyed seeing approach. And so what that means is we're marrying a Western and Indigenous value system together to see at which points they can reinforce each other in different ways. And so when we have a community-driven outcomes contract, we're going to look at taking a Western measure, and it will not be operating in a silo. It's going to have to be paired with an Indigenous value that is actually interpreted by the community in which the initiative is serving to say, this is what we care about. This is the change we see. And so this is how we would need this to be valued in totality, right? So I think, again, the balanced approach, starting small, elegant, is a good way to go.
Small and elegant is always great, isn't it? Certainly in my world, in the research, my background is research, so that was sort of terms we use there as well. Graham, I guess kind of a similar question about impact for you. Yeah. How do you at Trinity Centers measure impact, your impact to your stakeholders?
Thanks, Cathy. So just for the contrast in the conversation, I will say if Rebecca was focusing on some of the qualitative, and again, if you hear more of Raven as a group there, I really believe that Raven's holistic impact measurement structure, which includes both quantitative and qualitative, is really one of the best in Canada. So I am very graceful of Rebecca to just say that in a few minutes. There's a huge amount there to go forward with. We're at an earlier stage, but we have gone purely quantitative. And I'll explain to you what I mean by that. We have two outcomes, right? We take a church property and it either becomes used by a bunch of other charities, it's a community hub, or it's demolished and we build housing. So we have those two categories. If it's housing, we have a very clear measure, which is housing affordability, which is simply saying we build 100 units, here's the market rate, and here's the affordable rate. The difference between the market rate and the affordable rate is the impact. Now, if we also build that building to a green standard and it's it's near good transit links, etc., we can add on. If we are then housing vulnerable people or creating supportive housings, we can layer on housing impacts, okay? We're fairly familiar with the idea of housing affordability. We have simply taken the exact same thing and done that for the community hubs and saying, if I take 10 charities and they all go and rent their own office space or try to build their own theater, here's how much it's going to cost them. If we can put them all in a building together at this cost, we have created that affordability for those organizations. So we are simply measuring our impact in those dollars as phase one. Phase two then becomes, well, what are those charities? Who are those people living in those housing units? And how do we trade that off? If we have Black-led, Indigenous-led, LGBTQ2 spirit-led, women-led organizations, who have often been excluded from religious narratives, if those are the tenants or partners or stakeholders or members of the not-for-profit holding corporation, and they have equity in the project, now we're adding on. But what we found is really helpful, Cathy, is for the impact curious, as I think Ryan Turnbull, MP, coined, and Minister Gould's been saying as well, the impact curious, let's call them traditional finance folks who look at this and think, this really sounds like you're eating my returns, is what's going on. It sounds like you should probably just put that over in the granting department of your foundation. For those people, we want to say, here, no, hold on a second. First of all, as somebody, I think Sabina, you said, respectable returns. These are, I like that term a lot. But if we can talk pure numbers to some of those people, and housing affordability is a good one, I think we help the impact curious take their next step along the journey. So that's what we're doing.
Great. Thanks, Graham. I like that term, impact curious. So we've got the 5, 6, 7 minutes left before I think we want to make sure we leave some time for the questions from the group. So Leena, I actually want to engage you here, and then I'm going to come back with a question for all three of the other panelists, and I'll start with you, Sabina, on that one. So Leena, just based on everything you've heard here, and I know you've talked to all these folks previously and developed case studies coming out of their work, but I'd just like to, what would you like to add at this point on what you've heard and how this fits in with what you found in your research, with the other projects? Is there anything here that surprises you? Is there anything that doesn't surprise you? What really resonates in terms of what you've heard from other case study and other project participants? What might be different? I don't know, kind of a big question, but what would you like to say here?
I think one observation is that many of these organizations are trying to tackle big, wicked problems, complex problems. And another one is that, in relation to a question I saw in the chat, that we didn't see a lot of differences between different types of social purpose organizations. So whether one was a charity, a not-for-profit, or a for-profit. Another one that I guess in common, but something that we kind of looked for was, and you might recall this conversation, Cathy, around the difference between provinces and territories, regulations impacting the problems or the needs to engage with social finance. We didn't really find a lot of that. So these common complex problems exist beyond the boundaries that we've set up in terms of provincial legislation and such. But yeah, so we have problems that we've historically had. They've created ever increasing gaps and complexity. And social finance is one approach to solve some of these problems. The partnerships, the innovation that comes with social finance. But I guess one thing to sum it up is the awareness and the complexity. Now, as I listen to our panelists and as I've listened to them in the research, I'm so impressed and humbled by their awareness of, these issues from different perspectives. Not only finance, but like the historical issues and the legislative concerns and all of that. So that all-encompassing perspective is something that I was really impressed with doing this research.
Thanks, Leena. So my last question for the Sabina and Graham and Rebecca, be switching gears a little bit, but as most folks on this call probably know, after many years of waiting, the announcement was made that the wholesalers, at least, have been selected for the social finance fund, and that was just announced a couple of weeks ago. And there's also recently at this little online and at the recent social finance forum, there's been a lot of chatter about the continued need for capacity building, resources, support, that despite, 2 tranches of funding for investment readiness, there's still a lot of organizations that are not investment ready or are not even aware or familiar with social finance. They don't begin to know how to engage in the social finance marketplace. So I guess I'd be interested in all of your thoughts on that. What do you see from where you sit as, some of the gaps and challenges and the needs for continued work in the area of investment readiness and awareness raising? And I'll start with you, Sabina.
Sure. Thank you. Thanks, Cathy. Yes, I think it's a great initiative, but a lot of work still needs to be done. Many organizations, as you said, need technical assistance, capacity building. But I would also add to that systems. We cannot achieve impact at scale or investments at scale without proper data management systems. So this is something that definitely should be looked at for social purpose organizations, but also I would say a lot of collaboration between the organizations. We don't need to replicate things that other organizations are doing in the space already. We need to collaborate and make sure that when one type of work is done by one organization, it flows into another organization, and that flows into maybe another impact investor. So this way, when we work collaboratively within an ecosystem, we avoid wastage. We avoid wastage of resources, of time, and of money. So that's one takeaway I would say, is the ability to bring all the players into a room and collaborate effectively with partnerships.
Thank you. And Graeme?
My response in this question is training. And I mean that very specifically, training of the people who hold positions of trust and leadership in our social purpose organizations and intermediaries. And I particularly highlight intermediaries, partly because the IRP program was aimed at the social purpose organizations on the ground, and funding quite rightly by the program as it was constructed went in that direction. We now need to make sure we're really training the intermediaries, and there hasn't been funding for that yet. And I've certainly been one of the voices calling for that. And by support, I've been calling for 2 particular things. And on the training front, I'd like to give you specifically what I mean by that. As I went looking and I said, look, I'm a graduate of London School of Economics. I've been on the ground doing local, charity work for 20 years, but I don't know how to do this stuff. Where is the best place to learn? Mm-hmm. And I found at the business school at Oxford, the Saïd Business School, there was an impact faculty. I have now, so this is full confession, I've now joined that faculty as a guest faculty in the social purpose real estate subject area in social finance. So I'm biased towards Saïd, but it's because I've had such a good experience from that particular academic organization. I also am biased towards business school. I had never been to business school before. And I think we all need to go to business school if we're going to be involved in investment. And by going to business school, we don't talk about as much theory if we're not talking about cases. It's cases, deal structures. And I think we need to be educated on what those are. I would suggest, I think we need to create availability of that kind of training for leaders in Canadian social purpose organizations and intermediaries. It should be at certificate level, so it gives a good credential to the people who've done it, so their employability is improved. They should invest, I think, some of their personal funds. Their institution should invest to say, this is not off the side of your desk. And that's another thing with preparedness. Charity leaders, social purpose activists, we're good at just getting stuff done, right? Okay, gotta get that done. Okay, cool. Social finance, yeah, let's get that done. Give me the paperwork. Where's the form to fill in? Hold on a second. Or who's the consultant to hire? I think we have to be careful with that and realize we need to retrain in this sector. And the final thing I'll say is, on the consultant side, and we've come to love, part of our journey, we've gone around to all of the big consultancies and organizations, said, you guys are so smart, you folks are so smart, surely you know how to do this. And if you're not careful, most of those organizations will say, of course we know how to do that. We are this organization, just pay us this huge amount of money, of that last bit of money you got left, and we'll figure out how to do it. my loving warning to all of you out there is there are very, very few organizations. And I dare say the larger the consulting organization is, the less likely they are to really know where social finance is going. So training, learning, and being careful of the wrong type of training. And I think as Canada, I think we could actually fund. That's one of the things I've been suggesting. The other one is legal work. Legal work is incredibly expensive, and it's so easy to pay for legal work before you know what you're doing. And that's another area that I think social finance fund intermediary, the wholesalers, and the system, the IRP, if there's going to be another round, maybe ESDC, actually streamlining some of the legal so that we don't have SPOs reinventing the legal wheel every time. Those are two things that I think could help us increase preparedness.
Thank you, Greg. Rebecca?
Still got time for me? Is that okay?
Yeah,
All right.
absolutely. We're going to make time.
I'll lean into what Graham was saying. I completely agree. Education is the weapon of choice in this sector, and a lot of it, unfortunately, you do have to self-teach. You have to dig, and you have to network, and you have to build your own personal ecosystem. And I would say, I will give a plug to Carleton. I think that their Master's in Philanthropy and Nonprofit Leadership is a fantastic graduate program. I'm an alumni myself. They have a diploma program. There is no specific degree program for social finance. Trust me, I've looked over the past decade, but it doesn't mean that the educational resources are not available by asking the right people. People are your greatest resource. And so the biggest thing when it comes to readiness at the organizational level is the buy-in that you have from your current leadership, as well as your like management, but also your board. And so are they ready? Is your team ready? Are you guys willing to put in the sweat equity that's required to learn, fail, get back up again, and make the relationships work, right? It takes a village to get it to do the first one. The development arc is big, but once you start getting the ball rolling, it does get much easier. But that type of capacity offering, those kind of training modules, they are around. Groups like Volunteer Ottawa, the Center for Social Enterprise Development used to host some, and tapping on the right intermediary if they are able, and if you're willing to compensate them, I'm sure that type of offering could be found. So I am just generally excited that this level of look into bolstering the intermediary sector is now the present. Graham, I think we're in that moment of seeing and kind of having that focus of investment come into those bridge makers, right? So
well, thank you all. I want to leave time for some questions from the folks that have joined us here, and there's quite a few. So I'm just going to start with a couple. There's a couple of that I think are related. At least I think they're related. So I'm going to group them together. The first question is, where does one start with exploring social finance options for early stage startups? Is that funding available? Are there consultants that would help with grant writing? That's one sort of set of questions. And then a related question, where can early stage social purpose organization startups go to discuss and potentially access pre-dev funding for their business? So I think both of those are coming from the perspective of, we're really early, we're just starting out, we don't know much about this, who can we talk to, where can we get help, who can we go to? And I'll throw this open to whoever feels they have a good answer to this to start, or an acceptable answer. Or not, or I'll call in somebody.
I could take that one.
Go ahead, Leena.
So one of the findings from our own research actually is that there's a lot of incubators and accelerators out there, including some at universities. I want to give a shout out to Brad Andrews. I think he's on the call from Innovate Calgary. So there is different for-profit and not-for-profit cities, and different kinds of entities are creating different kinds of organizations that do this matching, if you would, between early stage organizations of any type and funders. So that's definitely one way to go. I don't know if other panelists have examples. Sabina, for example, with her work in micro loans, they offer micro loans to entrepreneurs. That work is being done internationally. Sabina, can you share any local resources?
Yeah, sure. I recently attended actually Spring Activator. They're doing a lot of work in this space. I've also attended like an investor forum, which they had with entrepreneurs they're presenting to possible investors. So I think that's another area that you could look at. Also, there are government resources available for businesses. There's a lender called BDC. They specifically lend in the areas of agriculture as well. So it depends what sector you're working in, what stage your enterprise is in, and what sort of support you're looking for. So, so I would second Leena on, looking at incubators and accelerators as the first stage to get information.
There's been a lot of agreement in this call. I'm just going to gently disagree with the incubator option for Canadian SPOs. And also would just underline, as wonderful as BDC is, they are very strictly not investing in charitable or nonprofit organizations. As it happens, the same minister, there's a couple of ministers involved in the social finance fund, but BDC is under their portfolio. They very clearly signaled it's the social finance fund for this work. So BDC, I don't think is there. The other thing is, I saw that ONN has been responding back on this comment. I'm sorry, I can't hold myself back. And I do come from the church. I just to forgive, so please forgive me. I'm going to be preaching, just for a second. Absolutely, charities can absolutely have earned revenue, and that's what's been put up in the chat. I know we'll get to it in a second. And by the way, no charity has to have an endowment. Look at the IB Foundation; they've dismantled it. So those are some huge pieces of this puzzle. But on the incubator side, the reason I mentioned that is incubators, in my view, are a venture capital function, which if you're an Indigenous business and you have a good case that you're putting forward to Raven, that's great. And if Raven has an incubator for you, that would make sense. But there are so many incubators that are finance first and that are extractive of there that I'm more scared of them than I am excited about them. That's what I'm saying. And the reason I partly disagree, I think when it comes to, somebody else is talking early stage, I think it's so easy for us as social purpose people to find the first thing that fits with our need, and then just we start running down that road. And that's where we tend to go to seminars, or we go to an intermediary. To me, I would differentiate that from a course where you're saying, I'm going to go from start to finish, and I'm going to learn things and theories and practices that don't directly apply to me. And I'm going to take that time over a long period of time, maybe 3 months, and I'm going to really learn this. So those are just my two danger spots of incubators and small courses and small one-day workshops. The depth of change that this involves, I really think needs that deeper level training.
And Rebecca, did you want to get in on this one, or?
Yeah, here. I mean, this is, I agree with your disagreements there as well, Graham. I think I would be wary to turn outwards before looking internally and saying, who's at the table, who's missing, what capacities are we missing, right? And Glenn Smith, you have a great point here. This entrepreneurial capacity is so critical to being able to have the vision about where do we want to go? Maybe how do we get there? Start with one funder that you have in your corner. They're giving you single year granting. Maybe we push for multi-year granting, and perhaps then we start to look at a blended finance approach that says, why don't you put a little bit of money down for this feasibility study? Why don't you look into this as we consider a potential revenue generating operation, right? That is extremely mission aligned. And then maybe if that is successful, why don't we talk about directing some of your direct lending arm from your portfolio over to us as well? Like, it's incremental changes that you get to push and essentially just share in the journey of learning. with these allies you do already have. So look at the assets you do have and start there.
Thank you all. Next question from an audience member. How do you find and connect with communities and initiatives that are looking for investment?
So if I may, I'll go there. From an international perspective, so we have donor-funded programs where we identify clients, we identify people, understand their needs. So we use a human-centered design approach to understand the needs of the communities in which we are working. And then based on that, we help by providing technical support. So they're part of our training programs as a first stage. We also link them to markets and also help in their product development. And then we layer that with access to finance. So access to finance is probably the third or fourth stage, while we've already been working with them for a number of years. And after that, we already know what needs they have and what sort of support we can give, how we can invest in them, and then take it on from there. So this is an approach that we use as a nonprofit organization to first provide that grant, donor-funded programs, and then layer that with access to finance, and then layer that with linking them to impact investors. Thank you.
And Graham, did you want to?
Yeah, just jump into, there's a great thing with we have a national advisory board for impact investing in Canada. The Table of Impact Investing Practitioners, which I'm on the board of, and CAFID are the two groups that are kind of trying to keep the thing moving. It's such a beautiful description as you hear Sabina, and as I reflect on the comments in the chat on what's going on in the Caribbean. I would just say this, and okay, this is a total rule of thumb. I apologize. I'm going to say this: development finance is here in its level of complexity. So when Sabina's talking about they are the best. The next best in our Canadian context is Quebec. Okay, the whole province of Quebec is way further ahead on this. There's provincial legislation that legislates how this is meant to work. The next is Raven. Raven's the best. Then Windmill. Then there's everybody else. Okay, and it's just when you're looking at development finance, to me, there are things that were made to work in development finance, overseas development finance, 20 years ago, that we can learn from now. And so for those of you who are trying to make sense of this, as you're hearing Sabina talking about this, thinking, this sounds so far away from what we're doing in Canada. That's that mix. And you see that between TIP and CAFID. And it is such a beautiful, to me, I would love to go and take a whole nother course just on development finance, just to learn of how, I heard about how they've done water bonds dealing with invasive species, dealing with water shortages in South Africa, and that turned into a bond. I'm like, that is so cool. So yeah, just
Graham, I just wanted to ask about the mandate of TIP a little bit, because a few years ago we did it. I was a researcher for the State of Social Finance in Canada, and we collected a database of every single social finance entity essentially and what they were up to. I'm wondering if you can speak to the intentions of amalgamating that type of resource or ecosystem map, or Leena too, if you guys have some sort of sense of where that's at.
I'll say one quick thing and then hand over to Leena. We've actually engaged PricewaterhouseCoopers, who've given some pro bono time to take that mapping to the next level. And really the question is, who feels comfortable at the tip table and who's not, who's kind of on the fringes, and how do we solve that? And does everybody fit into TIP or CAFID, or do we need to rejig that? What's the state of the ecosystem? So we've got an independent, PwC professional organization looking at that question. And, you look at what Future of Good is doing and SVX, these are members of TIP, but they're also doing their own. So it's like the whole thing, the whole ecosystem is going like this. And certainly TIP is wanting to make a seat for everybody in Canada doing this work as a practitioner, but not wanting to control any narratives and just figuring that out. So yeah, that explosion is happening right now.
Yeah, Cathy, if I can just wear my CAFID hat for a minute, I just want everybody to know that there's a state of the sector report that was generated by CAFID in 2021, and it's a very, very good resource for you to see the landscape, the mapping, and where each player sits and what is happening in the space. So would just recommend that report to everybody. It's on the Catholic website. The link is already shared. Thanks.
Thanks, Sabina. So we've got like 2 minutes, 2.5 maybe left before I need to hand it back to Amuska to wrap us up. But I see there's been, it's hard to monitor the chat and monitor a conversation as well, but I have seen some conversation in the chat. It looks like a fairly vigorous conversation in the chat about the extent to which social finance is feasible or applicable, particularly to registered charities. And the concern is that there's a lot of regulatory restrictions on charities and on their ability to earn revenue. And I feel like there's probably some of you have something to say about that. So I just wanted to throw that out to whoever wants to jump in quickly, 2-3 minutes top. Okay, somebody wants to jump in.
I'll jump in. We wrote to CRA. When we first started our foundation, we wrote to them and said, hey, we're trying to figure out how to restructure the property of the church. You know, is this going to blow your mind? Where are we stepping on toes? Are you know? And we thought they're never going to write us back. You know, they wrote us back. They put 4 members of the charity's directorate onto a call with us and said, we love what you're doing here. Who are your lawyers? And we told them who our lawyers are. And we set the thing up, and it's the people who say you can't earn revenue in a charity, I find often, I'm sorry to say it this way, they're poorly educated accountants and lawyers. They're not specialists in this area. They have a picture of what this is. Get a charity specialized lawyer or accountant, and they will restructure this, but don't be afraid of earning revenue. And if you're afraid of earning revenue, you can't do social finance because you need that revenue to pay back whatever money you've been borrowing. Mm-hmm. So it's be careful, beware of those professional folks who aren't charity specialists. And we can, any of us here can help you find a whole bunch of people who are specialized.
Okay, on that note, I'm going to turn it over, I think, back to Muska. And thank you all for a wonderful discussion. I had the easiest job here. I just had the law of distance, you guys, and you provided such wonderful answers. So Muska, back to you and to wrap us up.
Wonderful. Thank you so much, Cathy, Leena, Graham, Rebecca, and Sabina, for that very truly informative and engaging discussion. I think this could go on for 3 hours. I think there were a ton of great takeaways and considerations for SPOs, and we really, really appreciate your time and participation. It was also a pleasure to collaborate with Imagine Canada to host this very important event. And as always, thank you to our attendees for your engagement and questions. We have a very brief survey for you that will pop up on your screens now. So if you can kindly take a few seconds to complete that question, that would be tremendously helpful. And that will help us to continue to shape these sessions. Again, thank you so much for joining us and to our fantastic speakers for the incredible discussion. Enjoy the rest of your afternoon and the rest of your week. Thank you.
Thank you.